I put some new EMAs, or wait, I put some of my old EMAs on the chart. This is actually a strategy that I used to use last year when I was trading futures. The idea of having two EMAs on the chart and then looking for a cross for the direction and the overall kind of hold, what the trend is, and all of that very fun stuff. So let's break it down really quickly. I wanted to make this video. Everyone's got questions. Patrick, what do you have on your chart? First off, we got the pivot points. You already know pivot points, pivot points, pivot points. And then we've got the red line. We've got the green line. The green line is a 9 EMA on the 2-minute chart. And you could mess around with this, but I think 9's fine. And then you've got the 21 EMA, that red line. So we have the 9 EMA, the green line, the red line being the 21 EMA. Again, there is no indicator on this planet that is going to make you profitable. But if you use indicators as a way to kind of, have like a direction to kind of like stop yourself from doing, certain things, taking trades, maybe when the indicator is going sideways, maybe when we're chopping, whatever it is, you can see the difference, right? I think if we can get rid, let's watch. You'll see the difference between, if I get rid of these candles, right? Let's get rid of the candles, and you can see the difference, right? At open, we dumped from 19,200, we pull back, and then we start chopping. Look at the EMAs. They're kind of like just like, not very pretty. This move down, you can see there's a lot of fill. There's a lot of room, so it's kind of that trending down. We're trending down. Here, we end up crossing, kind of getting some separation between those EMAs again. We get stuck, and then we start to waller our way down. It's like market is absolutely dumping right now, by the way. Absolutely just dumping. But the big thing, the big focus here is, number one, if I'm looking for a short, let's say I'm looking for a short, right? I'm looking for a short. Do I want a short when, we're above? We had just crossed right here. We had just crossed. We just pushed up. Do I want a short right there? Probably not. Now, as I see, we start to break to the downside. We break to the downside. We get below the EMA. And then I'm looking for a short opportunity, something like this, where we get that little bear flag set up, another little bear flag there. We're pushing back up into that 9 EMA. We're getting our signal as we tap into that 9 EMA. Kind of the next candle to make a new low would be our entry, and then that move down. Again, this is not a new strategy by any means. It's been done a million times, but I had a lot of questions on the live stream today, so I wanted to make a video talking about it with you guys. Look at the NASDAQ right now, filling the gap here. We pulled all the way back down there to fill the gap from the overnight move there on Sunday. Big move. To be honest, it was chopping, and then just a beautiful 200, 400 point move to the downside there after 11 o'clock. So the 15-minute range today, it's funny, like, again, like in hindsight, looking at this, look at the 15-minute range setup today. I was trading basically inside this area, got chopped up. And look, once we broke that 15-minute range, bang, 19,000 down there to the 18,820. So that's 150 points. Problem is the patience, the absolute just patience that you need to wait for this setup to play out. Again, the EMA setup here, we had the cross there. Those EMAs cross, they start to get separated. And bang, here's our entry. Kind of looking for that move down through the pivot. It was funny because I told everybody this morning before the market opened, I was like, I'm going to be patient today. I'm going to be real patient today. And then this move happened, and then inside of here was just a chop fest. And, well, the NASDAQ decided to go all the way down there to fill the gap, tap in. Tapping in, that dotted line down there is Friday's close. We're pulling back. And there's that move down. Patience, baby. It's tricky. It is sometimes very, very tricky. Today is a great example of being patient. If I would have been patient, if I would have waited, if I would have had, the patience, I keep saying patience, but if I would have just waited for us to get the 15-minute range open, to get the opening range breakout, if I, would have just stuck to the plan, Patrick, stuck to it, it would have been a real easy day of trading. But it's all of this, right? From 9:45 till, what is that? 10:45, an hour of sitting there watching the chop and trying to predict if it's going to go higher. Oh, it's going to go higher. It's going to push to the highs. Blah, 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 blah. And there's the big dump back down. So we got the 9 EMA. We got the 21 EMA. Again, I'm not looking to take this as like a signal where I'm like, oh my God, every time the EMA crosses, I want to get in. But like here, EMA crosses, okay. What do I look for? I look for a bull flag. There's the move up. You had a little break here. You're kind of looking for a bear flag. All right, there's the little bear flag, moving down. And you're kind of looking for these little crosses for opportunities. Like it kind of crosses and gets a little weird throughout the middle of the night sometimes. But if you look here, we cross, start to push up, start to push, break to the upside. Again, it's just something that I'm using or I can use to keep me either in the trade longer, to make sure I'm on the right side of the trend, to make sure that I'm trading, the market moves, kind of momentum. And like here, kind of that reversal, we break out there. The EMA crosses 18,400, pushes all the way up there to the 600s, still holds. We did not get a cross on the EMA. We push up. We did get a small cross here. We pull back. Another cross happens there. So might be something to think about. If the market's going sideways, the EMAs look like poo-poo, it might be a good reason to not trade. If the EMAs look like poo-poo, that probably means that the price action is also poo-poo. So yeah, I'm gonna try to stay out of that poo-poo moves. It's frustrating, man. It is absolutely frustrating. Because look at this move now. I mean, it's just beautiful. You could have gotten short there, 19,000s, and just rode it on down. Just rode it on down. There it is. The 9 EMA, the 21 EMA. This is the 2-minute chart, by the way. 2-minute chart with those EMAs. It works on other time frames. You just got to kind of mess with it. This is like the 1-minute chart here. We'll see what that looks like with a 1-minute chart. You got your 21 EMA maybe this is 21 EMA. Like you see how we did not get back above the 21 EMA there on that move down. It obviously looks a lot easier when the market's trending. I mean, any indicator looks really good when the market's trending. It's this, right? It's when the market's chopping and going nowhere is when you end up getting fooled. The market definitely fooling everybody today. And that's it. That's the move. 9 EMA, 21 EMA. I use it on the 2-minute chart. Try it out on your own chart, whatever time frame you like to trade on. See if it helps. If it doesn't help, I mean, you don't have to use it. The 9 EMA, the 21 EMA. There it is, the holy grail of moving averages. The cross. Oh, Lord. Oh, Lord.